The Iran conflict is crippling your wallet, with gas prices skyrocketing 32% in just a month. Can you afford the cost of war? The conflict in Iran has been raging on for weeks, and its effects on the global economy are starting to manifest. The Strait of Hormuz, a critical oil supply route, has been closed for 4 weeks, choking off 20% of the world's oil supply. This has led to a surge in oil prices, with Brent crude oil reaching over $100 per barrel, a $29 increase from last year. The average gas price in the U.S. has risen to nearly $4 per gallon, a 32% increase since the conflict began. This is the highest gas price since October 2022, and it's expected to get worse, with Goldman Sachs warning that oil prices may stay above $100 for years. The worst-case scenario is that gas prices could hit $5 per gallon in Q2 2026, making everything from shipping to farming to construction more expensive. Let's break down the impact of the Iran conflict on the U.S. economy. Firstly, the surge in gas prices is having a devastating effect on American wallets. The average gas price has risen by 32% in just a month, from $2.98 to nearly $4 per gallon. This means that the average American is spending an extra $100 per month on gas, which is a significant burden for many families. Can you afford this increase? What will you have to cut back on to make ends meet? Additionally, the higher diesel prices are affecting various industries such as shipping, farming, and construction, leading to higher costs for goods and services. For instance, the cost of shipping a container from China to the U.S. has increased by 15% in the past month, which will inevitably lead to higher prices for consumers. Secondly, the housing affordability crisis is deepening. Mortgage rates have risen back up to 6.4% from a brief dip below 6%, making it even more difficult for young couples to afford a home. In fact, a young couple now needs to spend 70% of their annual income on a down payment, which is a significant increase from the 45% required in 2000. This is leading to a record gap of 631,000 more sellers than buyers nationally, with 66 of the 200 largest markets now exceeding pre-pandemic inventory levels. Zillow is predicting a mere 0.7% home value growth, and experts are warning of a severe affordability squeeze. How will this affect your dreams of owning a home? Will you have to delay your plans or look for alternative options? Thirdly, the inflation spiral is accelerating. The Consumer Price Index, CPI, was 2.4% in February, but it's expected to jump to 3.5% when the March data is released, and possibly even top 4% in April. The OECD is projecting that the inflation rate will continue to rise, and the Fed is considering raising interest rates to combat it. This could lead to higher borrowing costs for consumers and businesses, which would further exacerbate the economic downturn. What will this mean for your wallet? Will you have to tighten your belt and cut back on discretionary spending? Lastly, the Trump economy is failing to deliver on its promises. The president promised a roaring economy in 2026, but instead, the country is experiencing job losses, rising gas prices, and uncertainty. The U.S.-born unemployment rate has climbed to 4.7% from 4.4%, and higher oil prices are already affecting American businesses, particularly in the trucking, airlines, and restaurant industries. The IEA is releasing strategic reserves, and OPEC Plus is increasing production, but it may not be enough to alleviate the pressure on the economy. How will this affect your job security and financial stability? Will you have to prepare for a potential recession? The impact of the Iran conflict on the U.S. economy is far-reaching and devastating. With gas prices soaring, housing affordability in crisis, inflation spiraling out of control, and the Trump economy failing to deliver, many Americans are struggling to make ends meet. A recent CBS poll found that 7 in 10 Americans are struggling to pay for food, housing, and healthcare. Can you afford the cost of war? What will you have to sacrifice to stay afloat? The Iran conflict is a stark reminder of the fragility of the global economy. The U.S. government must take immediate action to address the crisis, including releasing strategic oil reserves and working with international partners to increase oil production. Additionally, policymakers must prioritize measures to reduce the country's dependence on fossil fuels and promote alternative energy sources. What do you think the government should do to mitigate the effects of the conflict? Should they prioritize economic growth or national security? Stay informed, stay vigilant, and stay ahead of the economic curve. Subscribe to our channel for the latest updates and analysis on the Iran conflict and its impact on the U.S. economy. What will you do to protect your wallet and secure your financial future? Will you take action today?